These 5 confirmations will make your trades hit instantly. I'm also going to show you guys each indicator I use to help you guys out. Quick disclaimer, this video is not going to be edited. So if you can't retain yourself for the next 5 to 10 minutes without me fucking your brain with like edits and visuals, then maybe trading is not for you. Anyways, with all that aside, let's hop onto my computer. Okay, so first of all, let's start with the easy shit. I'm sorry this is so messy right now. Wait, let me just remove all the drawings and let me take off all the indicators. Basically, what the fuck, that's a crazy ass drop, but actually this is a really good example. We're gonna start off with an FVG. Okay, FVG is short for fair value gap. All right, so fair value gap could go in 2 ways. The first way it could go is in an uptrend, it could create a gap, and another way it could go is in a downtrend, it could create another gap. Or wait, just like downtrend, it could create another gap. All right, so let's quickly look at where the gap is over here, and I want to see if you guys can spot it. I'll give you 2 seconds. 1, 2. Okay, basically the gap is right over here. So how did we figure this out? Okay, so you have to look at 3 consecutive candles. 1, 2, 3. And if the top of the wick here does not match with the bottom of the wick there, that is a gap. Okay, this is a large gap. I'm assuming some news. Oh yeah, news did drop today. I think unemployment rates were a little lower than expected, so that kind of tanked the euro economy. But let's take a look if you guys could find any other, or if I could find any other gaps. And these gaps are so prevalent in the market. So here's another gap. Okay, but what could these gaps be used for? All right, so that's what you got to think to yourself. What could these gaps be used for? The main point of a gap is that it indicates a really strong move in the said direction. So if it was a bullish fair value gap, it indicates a really strong move in the bullish direction, and usually price will retrace back into it and then bounce off. Right? Do you see how it just keeps bouncing off and it just keeps going on uptrend? That's something that you could use for your trades. So let's hop into another trade. Like, I don't know, let's look over here. Right, look, there's a fair value gap right here. I spotted it. Price retraced into it and then it respected the gap. So it was going uptrend, it moved back into it, it touched into it, and it continued its uptrend. It just bounced off. Imagine like on a trampoline, it just went boom, bounced off. So you could have used this as a confirmation for your trade. Don't solely depend on this. Okay, so that's something a lot of people need to understand. You don't solely depend on these. Okay, so you don't solely depend on them. You have to use them as a way to continue thinking. So I'll show you guys some other stuff called break of structure later, but in that case you could take advantage of the break of structure as well. So it's like, okay, it bounced back into, I'll wait until it breaks the structure, or actually you can even do this one, wait till it breaks the structure, it closes upon, and then you just hold it, right? Yeah, so that's one of the ways. And you see the price even came back into this fair value gap again and bounced off, right? And usually in the higher time frames they have fair value gaps as well, and yeah, you could just utilize it. So in the case of this big fucking downtrend, one thing I could see potentially happening in the future is that they need to fill this market gap. Okay, 100% they have to fill this gap. There can't be just like a big hole in the market. So price might retaliate back into it, maybe touch up until here or up here, and it continues downtrend again if it's going to be a bearish market. But if it continues being bull, it's just going to break the fair value gap, and that's something that does happen. So I don't know, let's say right over here there's a fair value gap right here. Do you see how price, it touched into the fair value gap but it didn't bounce back down, instead it broke up? That's another indicator. It's like it disrespected the gap. So one thing you could think about is like potentially going along in some scenarios, right? But again, don't use this as a sole reason to trade. Okay, like in this case, you might have lost money if you thought that, okay, here we're gonna go long, and you set your stop loss here, you would have been stopped out. Yeah, let's hop over to number 2. How long is this video? 4 minutes, bro. TGR bootcamp would have taught you this in like 2 30-minute videos. Okay, I'm fucking putting you guys on game. By the way, I learned all the shit from TJR, so I can't hate. Okay, next thing, break of structures. Okay, so market, I talked about this I think in my first video. Market moves predictably. Okay, higher highs, higher lows. Okay, higher high. Okay, wait, oops. Higher high, higher low, higher high, higher low, higher high. Okay, so in some cases it could break structure. So let's say what that means is that, okay, high, higher low, lower high, lower low, lower high, lower low, and then it just goes up till here, and then it breaks the structure, right? Boom, it broke it. So that's one confirmation that maybe it's gonna start going upwards now. Okay, it broke the structure, it's gonna continue going upwards. So let's look at over here. I showed you guys an example previously. I couldn't find it. Okay, but like, okay, even here, do you see how you can really find an example anywhere? I don't know why I was geeking like that, but do you see how it's like high, it's high, lower low, lower high, lower low, lower high, blah 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 blah. Over here, there's a high, and it broke, and it continued going up. And I'm not even cherry picking this. Look, I could fucking close my eyes, like hit space a bunch of times, and then find like, okay, Nasdaq. I don't even fucking care. Like, bro, I'll find some random ass place, and I'll trade it. So look, let's go like right here. Okay, look, a break of structure. I'm just trying to find like very like vulgar ones so you guys could see the point. Break of structure. It continue going downtrend. But then here, another break of structure. Now it's going up, right? Just try to notice this in your things. Oh fuck, I forgot to give you guys the indicator. So if you want to get the fair value gap indicator, because it's kind of hard to spot unless you're like trained, but to help you train, click this indicators button and do FVGs by Nephew Sam. That's the one I really like the most, because it just like plops it onto you, like the ones you actually need. And here, let's go back to your USD. And one thing I like to do in this setting, it says extend boxes. I extend the boxes, okay, because it just helps me visualize it better. All right, so look, there's so much FVGs that we fucking missed. Like, you got it, guys. You guys got it. Here's like 30 minutes. It changes from time frame to time frame. And boom, now it just made your life a lot easier. Unfortunately, I don't think there is one for break of structure. Actually, there's a universal one. It's called the ICT Concepts by Lux Algo. It tells you the break of structure, sell side liquidity, blah blah blah, right? But it's a little confusing. It does tell you about the order blocks though, and that's something we'll get into later. Okay, next thing I want to talk about after the break of structures is liquidity sweeps. Okay, that's mine. If you're in my Discord server, like, which is free by the way, and you should join. Okay, it's completely fucking free. There's nothing paid for. Liquidity sweeps. I'm not gonna teach you why it occurs, but what it is essentially there's areas of high liquidity. In some cases, I want to find like a good liquidity sweep for you guys. Because it doesn't always occur, okay? But there's areas of liquidity, like highs, that the trade likes to go up to. Okay, like here, I found it. So trades like to like move up and take people's stop losses away, okay? That's like kind of hinting at what's happening. But people like the market makers, they know how people set their stop losses. It's usually just a bit over where they entered. So right here and here are possible zones of liquidity. Any like prominent high or prominent low are possibilities of liquidity. So price went up here. It took out this liquidity, and they're trying to like, because you have to buy and sell in the market, okay? So they're trying to get older people to stop out, and they have to sell their shares now. So boom, it went up here. It kind of swept it. It hovered a bit over it. But if I were you, I would have put a short here with other confirmations, of course. But I'm just like, because I already know what happened, I would have put a short here and maybe placed the stop loss around here, and I would have targeted another low right here. I would have targeted this, right? And this trade would have played out for a while, and then boom, I'm assuming what most likely will happen is that price, and this is like kind of like a signal, but don't trust me, this is not financial advice. I'm not trying to get in legal trouble. It's probably gonna like maybe go like this, touch into here, sweep this, maybe go down a bit, and then maybe disrespect the fair value gap. Okay, this is what might happen. I hope I'm right. If I'm right, like fuck, I'm a genius and you deserve to, like, I deserve a subscribe. Okay, so yeah, that's all. For liquidity sweeps, an indicator, if you go here, it's called Liquidity Sweeps by Lux Algo. Just put it on. It kind of tells you where prominent liquidity is. So this would be liquidity, this would be liquidity, this would be liquidity. I already made some out, but it's literally just prominent highs and lows. Okay. Next thing, this is the last thing. How long is the video? 10 minutes. Fuck, I've been yapping like crazy. Okay, the next thing I want to talk about is order blocks. Order blocks are literally places where there was kind of like a extreme movement. So right here, this is an order block. Because do you see how like it just like went from uptrend to boom, a downtrend? So basically what you do is like you find where it, like the last candle that kind of changed the shift. So this would be the last candle that changed the shift. And the reason why order blocks are good is because this is the area where what's called buyers or whatever, sellers or market makers, they want to get price into here to continue the trend, right? So do you see how price tapped into that little box and just boom, blasted downwards? The same way it did here, boom, blasted downwards. That is probably a way, if you mix this in with maybe a liquidity sweep and a break of structure, and maybe there's like some FVGs here that I just don't see. Yeah, there's one right here. If you, okay, fuck it. But if you mix it in with all this stuff, see, you could potentially kind of like figure out what that's gonna go down, right? But in this case, do you see how it like, yeah, you could have caught this like little scalp, but in the future, let's say over here, right? You could have caught this scalp. Actually, I'm like lying, but over here, it went up and it broke it. So that could tell you that it could possibly go long because it broke the order block. It didn't continue. Order blocks, I don't know if there is like an actual like, wait, what the fuck? Let me take one off beforehand. Order block. Okay, I don't know if there's like, probably Lux Algo. He has like some really good ones. But yeah, it just highlights potential order blocks. What the fuck? This is kind of confusing. Oh yeah, see, boom, just bounced off that order block. My prediction kind of correlated with the order block too. It swept it, bounced off the order block, and you see how you can like take this 4 that I just gave you, right? You could take these 4 stuff that I just gave you and just mix it and just mash it together to create your own strategy and your own basis. You don't really need all this like fancy like ICT stuff. Like some of the stuff is ICT, order blocks and FVGs. I think ICT made it. But you don't need all the extra stuff. It's just, you need to know these key concepts, understand how they work, fully understand how they work, and then continue like learning, right? I don't know if I yapped too much. Yeah, 13 minutes is crazy. Crazy works. But oh yeah, by the way, I appreciate all the support I've been getting lately. Hold up, let me zoom it in because this is real talk, and let me go to my desktop for lighting. I appreciate all the support. I appreciate all the support I've been getting lately. 92 subscribers in just a few days. It's crazy. I appreciate all that. I especially appreciate all the ones that are following my Instagram because damn bro, I've been blowing up there lately. Check it out, link in the description. Join the Discord too. I have a completely free Discord where we just call and then trade. Hold up. Let me see if I could pull it up. Yep, it's this. It's completely free. As you can see, there's like no paid for stuff. We just talk here. I'm like, to be completely honest with you, I might make this paid for in the future when there's like a lot of members. But right now there's like maybe 50 of us. And the reason why I'm not making it paid for is because I just like really want to help you guys out. Also, they help me out too when we live trade in this voice channel right here. You can see this voice channel. We live trade here. But yeah, with all that aside, I hope you guys stay safe and yeah, keep hustling. See ya.